we misunderstand risk because we believe that it's something that protects us, but in reality it's something that we willingly acquire because it enables us to live. More people drown who can swim. If you can't swim, you generally don't go in the water. If you wait for the traffic lights to say green, you are assuming that the cars are going to stop. And just because we're crossing when the traffic light's green, it doesn't mean that there isn't still a risk that we need to be aware of. But for every potential harm and potential detriment within risk, there is always a potential benefit. When someone asks you to take a risk of something, think of one, who is benefiting from that risk that you're being asked to assume, and two, do you already have the skill set within you from 2 million years of evolution to make a better assessment of that risk?
Hello everyone, thank you very much for coming today. We're so happy to see you. Thank you very much for your beautiful looks today. Thank you for coming. Let me quickly introduce you. Simon Carse, our financial compliance expert who will be delivering the talk called Risk or Opportunity. Simon?
Okay, thank you. Right, good evening, how are you doing? So, I want to discuss risk, and I want to discuss risk in a way which might be slightly different to how people normally assess it. So when we look at risk, we tend to think of warnings on the spreadsheets, we tend to think of your capital is at risk, or you might fall over if the floor is wet. So we're sold risk as a issue that exists throughout the whole world. But in reality, risk is completely misunderstood. I will give you an example. There is no risk in certainty. So if you know it's going to rain, there's no risk because you know it's going to rain. You know when you go outside, you're going to get wet. That's the fact. Another thought then, when the only certainty that we have is we're going to die. So there is no risk of dying. The risk is we might survive. And we spend our lives acquiring risk to ensure we do survive for as long as we can before we meet the certainty where there's no risk of our own death. So it's a different mindset to say that there's a risk of death. There isn't. We're going to die. That's not a risk. That's a certainty. That's as certain as getting wet when it's heavy rain. So the risk that we acquire enables us to live our lives. So we go back to the caves. We're living in the cave. We think that we're hungry. We're looking to go outside. There's a risk we might get eaten versus the risk we're going to starve if we don't go and acquire food. Where we consider that we have an objective or something that we want to do, we minimize that risk in our mind. So when someone says to you, you fancy doing bungee jumping, if you want to do it, you don't consider it to be that risky. If you don't want to do it, you consider it to be more risky. But the risk is the same. It doesn't change. The rope is going to break and you're going to die. So it doesn't change. But our assessment as to how we look at risk determines as to whether or not we're interested in the outcome. So firstly, we misunderstand risk because we believe that it's something that protects us, but in reality it's something that we willingly acquire because it enables us to live. And without our ability to acquire risk, we don't live and we die, hence there's no risk in death because it's certain. So then we look at, when we acquire risk, how can we reduce that risk? How can we mitigate that risk? There are two things that we do which we think are the same, but they're different. One is risk mitigation and the other one is risk substitution. So risk substitution. If you get in a car and you have an accident, there's a risk that you could go through the windscreen. So you put the seatbelt on. By putting the seatbelt on, you are substituting the risk of going through the windscreen with being trapped in the car in the event that it turns over. But you're still incurring a risk. You're just substituting one for the other. Now, you might be happier to acquire the risk of being stuck in the car as a substitute for the risk of going through the windscreen. And that's not a bad playoff, because generally that's considered to be helpful. But risk mitigation is when you look at, say, holiday insurance, and you say, well, I'm going to go on holiday, I'm going to take out a policy, so I'm going to mitigate the risk. But the point about that is that you're not actually mitigating the risk. The risk remains the same. Your bag can still be stolen, you can still trip and fall, hurt yourself skiing, you can still suffer harm. But the insurance policy gives you the implied benefit of money, because you're going to claim on the policy to offset the cost of tripping and falling or having your luggage stolen or crashing the car. But what you're actually doing is you're not reducing the risk. You're just turning the risk into something that if I incur it, I'm going to get a financial benefit, and that financial benefit should offset the cost of the risk, which has just arrived and just come my way. So we look at risk very differently from an actual usage point of view, how we live our lives. We wait on the traffic lights are green before we cross the road because we think that's safer. But let me ask you a question. Is it safer to cross the road where there is traffic lights, or is it safer to cross the road where there's busy traffic? Now, you could argue it depends on the culture and the environment and the training of the drivers. But ostensibly, if you wait for the traffic lights to say green, you are assuming that the cars are going to stop. So you are saying, I am relying on people's self-discipline and skill set as a driver and as an obedient citizen, that when the traffic light goes red, I'm going to stop. Therefore, it's safe for the pedestrians to cross. But we all know that when you're crossing, particularly in London, that you don't worry about the cars when you're in the crossing, but you're looking to see whether the motorbikes or the cycles are coming down between the cars. So let's move that away from there, and we go to a busy main road. Traffic everywhere in both directions. It is safer to cross there, because when you decide to cross, you're not making any assumption that people are going to stop. So the only reason you're going to cross that road is because you believe that it is safe to do so. So you have made your own judgment without relying on the fact that you're expecting people to stop. So in some cultures and in some places, it is easier and safer to cross the road in busy traffic because you wait for a pause. The road is 12 feet long. When you're walking, it's 4.4 feet a second. So it's going to take you just under 3 seconds to cross 12 feet of road. And a car is 6 feet wide. So as long as you've judged it right, you should be able to cross the road appropriately. So it's wrong to say that it's safe to cross at a traffic light controlled crossing. It should be safer, but we don't know that it is. And just because we're crossing when the traffic lights are green, it doesn't mean that there isn't still a risk that we need to be aware of. And that risk might impair our ability to survive, and we end up with the certainty of death. We'll take another case where they misunderstand risk. So in America, unfortunately, there are occasions where children are playing with a gun and they get shot in their house. The number of children in America who die through those unfortunate experiences is about 1 a week. Now, if someone says to you, your children have been invited to a swimming party at somebody's house, the children go. But if you say to them they've been invited to a house where they keep guns, you say, no, we're not going to let them go there, it's dangerous. And yet 50 children a week drown in swimming pools in houses. So from a risk ratio, it's safer to let them go to the house where where they keep guns, because the risk is the wrong way. But we don't like to accept that as a safety. We like to think, oh, kids playing in the pool will be great, with no problem. They're going to take the costumes, they're going to have fun. But we don't realize the risk that we're pushing them in. And another, just talking about swimming, more people drown who can swim. If you can't swim, you generally don't go in the water. If you can swim, you tend to go in the water and get into trouble and drown. So again, when it is something which we want to do, we make a different assessment of that risk that really exists within that. And we're suboptimal in those choices, because we will sometimes make the wrong choices which don't necessarily benefit what we're trying to achieve. So what actually is risk? Risk is potential harm, potential detriment. But for every potential harm and potential detriment within risk, there is always a potential benefit. So let me just suggest, when you go to sleep at night, what is the benefit? The benefit is that you're going to get a good night's rest and you're going to wake up in the morning. Great. What is the risk? The risk is that the house could catch fire, the bed could collapse, a plane could crash on top of the bed, you could suffer an illness. But you decide that the risk of going to sleep is outweighed by the benefit of waking up the next day. But the risk is there. So let's look at what we're drinking tonight in terms of water, let's say. The reason, or not water as some, why do we drink water in glasses as opposed to a cup of tea which would be in a mug? One reason, okay, of the heat tolerance of the product. But secondly, if the water hasn't been boiled, we want to see that it is clear. So we'll have the water in a glass. Culturally, but safely, we will look to see that the water is clear. If we go to the riverside and there's water running through the river, you won't want to drink it because you think, well, I've got a bottle of Evian at home, I've got some water in my portable container, I don't need it. So your risk assessment is, I'm not going to drink the water in the river because it's too high. However, if you haven't got any other water and you're that thirsty, you will completely change your risk assessment and you will say, oh, it's quite safe to drink the river water. And you'll do it. And it's amazing how quickly you come to those decisions. Because when we're doing something which is protecting us from the certainty of death, doing something which protects us, we will inquire the risk of drinking the river water because we need to hydrate and we can't hydrate through the use of bottled water. So again, we change our aspect for the assessment of risk. Now, the problem with risk now is that we understand how we use it from an evolutionary point of view, from an operational point of view, from how we live our lives, from crossing the road to drinking the water. So then the regulators say you have to have a risk warning on a document. So you've gone from what is an analog experience, which has enabled us as individuals and as a human being and as a race to survive over X millions of years, to an abstract experience where we are taking numbers which represent money, and money itself is a representation of action, and money is a store of value and representation of action which you can trade with others, a medium of exchange and a store of value. So you're taking, but then you take what was a useful thing, which is the physical money, and you turn that into a number, and then you turn that number into another number and give a risk warning on a document. So if I say to you, if you invest, capital is at risk, what does that mean? I mean, we're not, we can all sign our own names and walk and talk. And yet a lot of people, if you say to them, what does it actually mean when it says capital at risk? People, it's very difficult to fully understand and to grasp the benefit of that. And let me ask you another question on this. If I say to you there's a 5% risk of you losing money or a 3% risk of you losing money, how do you know which is better? And how can you determine that 2% makes it, oh, well, in that case, I'll invest? it's only a 3% risk. But in reality, it's a fantasy, because nobody can turn around and say, oh, the market's only going to, this event is only going to call the market, it's only going to fall 3%, therefore you're safe. That's never going to happen. So again, we live in a fake world of the way that the risk is sold to us from a numbers point of view. And I mean, I work in financial services, I work with a regulator, I work on compliance, and I understand the risk warnings. But when you see a risk warning which says past performance is no guarantee for future performance, that's what they should say is previous losses are no guarantee that you're going to lose money in the future. That is because that is more accurate, because that's the truth. What they should say, what McDonald's should say on the apple pie is not contents may be hot and that you could get scolded. They should say contents are hot, you will be scolded. And if they say that and you're not going to sue them because you didn't get hurt. They've given you the information and you've made an intelligent decision on the basis of that information. You know, they say, oh, because of today's wet weather, the floor may be slippery at a railway station. It cannot be slippery at a railway station because you cannot put down flooring in a public space which is slippery when it's wet. There's legislation to protect that. So they like, not they, but there's this huge tendency to empower, to use risk as the threat of risk, the threat of harm, as a way of influencing behaviour to suit other thoughts. And why do the FCA want people to say capital is at risk? Just for the record, I love the FCA, but why do they want to say that? They want to say that because if somebody loses money and they then complain, the firm can then say, yes, but you were warned that you could lose money, therefore you're okay. Therefore, the FCA don't get asked a question in the House of Commons by somebody saying, this customer lost their savings through this firm. So the FCA want the firm to try to reduce the risk of the FCA being asked an awkward question in the House of Commons about people losing money. Because they have their own authority, their own reputation, and they're worried. It's not the client it's not the risk to the client that's being protected, it's the risk to the government, the risk to the regulator that's being protected. The regulator makes firms an agent of the state. The lawyer is an agent of the state. The regulator says to a regulated broker, we will regulate you if you behave in a certain way. And the way that you have to behave is to make sure that your clients are legal, decent, honest, and truthful people. And as long as you do your job properly for us, and you pay us a fee, we'll let you do it. That's the concept of a regulated business. And a restaurant is the same thing. A restaurant needs a license to serve drink and to serve food. They have to serve food of a certain quality. And as long as the people here tonight, hopefully none of us are going to be poorly, on the basis that everybody has a good meal tonight, then the restaurant continues to operate. It's paid for its license, and it has acted as an agent of the state. I know you're going to say, well, how's that to do with risk? It's all about where people want the risk to sit in their lives. And what I'm trying to say is that when you see a risk warning, try to understand who is benefiting or not benefiting from that risk, and what is the benefit for that risk, and is it really protecting you, and is it really helping you change your behavior in a way which is going to help you avoid harm, avoid detriment. So without talking much longer, because there's still food to eat, what I would say is that we know that where there is certainty, there is no risk. So we spend our lives trying to acquire certainty so that we don't have that risk. We know that with death, there's no risk in death because it's certain it's going to happen to us. But everything else, we're trying to survive, and we're trying to survive in the most optimal way. So when you look to acquire something, you want to do something which you know is risky, you need to understand for yourself, am I doing it? Am I reducing that risk unfairly because I want to do it? Or am I increasing that risk unfairly because I don't want to do it? You need to be honest with what you're doing, it's a helpful thing to do to also determine who benefits from that risk warning. Who benefits from the risk warning about an apple pie may be hot? Tom, you have to go, mate. All right. Keep safe. Yeah. He's in risk of missing his train.
He's mitigated.
Yeah. See you later, Tom. Thank you for coming, mate. So who is just finally, so with the contents maybe hot on the apple pie, who is benefiting from that risk warning? Anybody got an idea who's benefiting from that risk warning? Because it's not
selling the apple pie.
Why?
Because if they scold their mouth, they said, well, we save the slots anyway.
Yes. So what are they saving themselves from? The risk of being sued.
Yes.
Yeah. But they're not saving you, the client. They're not saving you, the consumer of the apple pie, right? So a lot of these risk warnings that were sold are not there to protect us. They're there to protect the provider of the item. Just, I'm a bit cynical on that side of things, because I think risk has a very important part to play in society. It's very important that we understand it. It's very important that we acknowledge what it might do for us. But we also need to know, car insurance, it's a state-controlled monopoly, because the state tell us that we have to have car insurance, so we have to pay for it. And what we're doing is we're paying a premium to ensure that in the event of an accident, somebody receives money for the harm that we have caused. It doesn't make us any safer drivers, by the way. But it's just what we have to do. And there was, finally, what I'd just say, there was a traffic junction in Holland a few years ago where they had an accident rate which was unpleasant. So they decided to try to reduce the accident rate. And they put up more bollards, and they painted the road, and they put up more signs and more wording, and they changed the layout of the junction, and they still could not reduce the accidents below a certain number. They just couldn't make it any safer. So eventually they came up with a radical idea, and they got rid of every piece of signage, every road sign, every piece of coloured tarmac. They just left it absolutely raw, which meant that when people drove along, they thought, what do? I got to stop. I need to look at this. And they gave the driver the responsibility of assessing the risk. Rather than saying, we are going to try to make it safer for you, they said, you're on your own. You have to work this out. And by doing that, the accident stopped, because they created the environment whereby the skill set that we've spent 2 million years evolving, we could actually deploy in a useful and sensible way. So what I would suggest is that when someone asks you to take a risk of something, think of, one, who is benefiting from that risk that you're being asked to assume, and two, do you already have a skill set within you from 2 million years of evolution to make a better assessment of that risk? Thank you very much.
If you don't know what's risky, what's not, here's an expert who knows what is risky and what's an opportunity. Thank you very much, Simon, for the talk.
Questions?
Questions.
I know somebody have a very special question prepared for days from now. Simon Denton,
You have a question.
And it's not a plant. So
Go on.
listening to you for the last 20 odd years, which is, inspirational at times. Would you say, as a parallel to that damn camera again, would you say, as a parallel to that, like the British population, well, as a statistic, the British population, 60% of the British population hasn't made a will.
Yeah.
So is it the case then, listening to your brave talk, that the population by and large is underinsured? Because you can't stop death, but you can buy benefits that it benefits others on your death. And I'm an asset protection specialist, so I can protect assets all day long regardless of life.
Yeah.
But should you be saying then that as a race we are under-insuring ourselves, and because with insurance you reducing risk? It's a commercial question.
I'm so sorry, can I answer that one? I don't agree with you, because are you insuring your risk, or are you insuring the risk of next in kin?
insuring
What do I
everything.
care?
You're
What
insuring
happens
everything.
with me,
Okay,
right?
so
You can
Directly-
practically have an insurance policy for anything these days.
Yeah.
Kidnap and ransom, emergency evacuation, and getting struck by lightning through the metal gateway.
Yes,
Yeah.
but following your logic, sorry,
No,
I will
that's
let you
okay.
speak in a
Yeah.
second. But following your logic, when we write a will, we ensuring the happiness of our next in kin. What do I care when I'm wrong? Well, and it's all gonna go to cats anyway, right? In that logic.
Government takes
Like Elton John left it all to cats.
So what you're saying in if we take the fact that I said at the beginning that the certainty is death, therefore, taking Simon's comment, there is a value with regards to the will. And the value with regards to what is the risk is that upon your death, your assets are not treated in the way that you would like them to be treated. So therefore, to say that they're underinsured, I wouldn't necessarily use the word insured, but to say that there is no effective way of ensuring that your assets are distributed how you wish in the absence of a will implies that you should have a will. Or a trust or something similar. So yes, there is value. There is value in having that, but it doesn't avoid the risk of your death because there isn't a risk of dying, right? Because that's a certainty. What we're trying to do is avoid the risk of the government or whoever choose it may be, or an individual, another interested party, i.e. somebody who wants to contest the will or contest the inheritance or the government from impairing your ability after you've gone for your heirs and successors to benefit from your input. So that's really,
So you agree anyway?
I agree with the principle, but I wouldn't call it underinsured.
Okay.
Yeah. Any other unplanted questions?
This sort of one, and I guess it crosses over to the insurance bit. If I go abroad to go fly fishing in dangerous waters, there's nothing really on my travel insurance policy. You might ask for 20 quid more. If I say I'm going skiing, well, it's got to be written into the policy. If I take the infinitely more dangerous process of going horse riding, which I don't do but my wife does, you can go horse riding anywhere you like.
Yeah.
Is it because the certainty of death from bloody horse riding, sorry, a bit cynical about horse riding, is such that they don't bother to even ask about it? What's that all about?
I would posit that it is basically to do with the frequency of the harm that is incurred by undertaking the endeavour. So there is more certainty of people breaking legs and getting injuries skiing than there is from horse riding. Primarily, horse riding requires a relative degree of competence for you to do it. And yes, there is risk, but a lot of that risk is reduced. And there aren't that many people horse riding as there are skiing, comparatively. The other comment I would say on that is that which is more dangerous for brain injury, boxing or golf?
Fewer people play, fewer people box.
No, but which is more dangerous for brain injury?
Brain injury,
Golf. Yeah. No, because people get hit by clubs when the people are swinging back. No, it's clubs. It's the back swinging. So there's a neurosurgeon who was interviewed a while back when a boxer had died, and the BBC were interviewing the neurosurgeon and said, should boxing be banned? And he said, well, we'll have to ban golf first because most of my patients are golfers who've been hit by clubs rather than people who've been hit by boxing. Now, the other question, look at the Isle of Man TT, which is the motor race on at the moment. And over the years, there's been 28 deaths, let's say, this century, right? A lot. Okay? How many people have died climbing Everest in the last 20 years? If we're going to ban Isle of Man TT racing, should we ban people climbing Everest? Because a lot of people die trying, as they say. So from that point of view, again, it's the nature of the knowledge that we have around us. It's the swimming pool versus the house with the gun. It's the misperception of the risk. And it's also the fact that if you're interested in the endeavor, you will minimize that risk, which there's a reason for that. And the reason is survival. Because if you're interested in drinking water because you need it to survive, you will minimize the risk in your mind of drinking the water from the river or in the pond. And if we hadn't got that ability to change our risk priority, we wouldn't have got to the point where we are now here after 2 million years. Because we have to have a variable assessment to risk. Goes back to what I was saying during my talk. Any other thoughts before we finish off the food? All right. Thank you.
Yeah, thank you so much, Simon.
Thank you.
May I please take the opportunity for the marketing, from the marketing perspective. You know, we're fairly young. We are nearly 1 year old as a company, and it's great that today we've got over 40 people who came. Thank you so much for growing. It's excellent. So, as a means of growing, we've got our YouTube podcast, our Telegram channel, which you all can join and see what we're doing and get the news in straight away. And also, you can consult our website and see what our offers are, and let us know if you require any of those services. We'll be happy to provide.
Well,
Thank you so much for coming.
Happy to take the risk of having you as a client. Yeah.